Good morning and welcome to the Traders Corner daily market update for the 3rd of December 2010. So what happened yesterday in the currency markets? Well, we had the non-farm payrolls come out with a disappointing figure of 39,000 versus the 143,000 that were expected. Now this is still positive job growth, the US are still creating jobs, but it's just, obviously it really puts a spanner in the works of the markets when the markets have had some positive data out of the US recently. The non-farms is the one that they're really looking to, and when they see a figure like this, suddenly their confidence gets dampened and everything, and suddenly they feel like all of the data before that really isn't as important because it's a consumer driven economy, and if they don't have the consumers there, the people aren't employed, there's no one that's going to be there to be able to spend money to help the economy grow and to push through this. So that was quite a big one, and the unemployment rate rose to 9.8% as well, from it was expected to come in at 9.6, but yep, went in at 9.8%. So really the dollar declined across the board, literally against everybody else in a big way. I mean, we'll go to the charts in a minute and we'll take a look, but the Aussie was up pretty much nearly 200 pips on the day, and it's just a massive down day for the dollar. The sentiment again has switched, and this is something that I've said in the past. I believe that the fundamentals are important, but what's more important to me is the sentiment in the markets. It doesn't really matter what the data is, it's what the markets are expecting and how the markets feel. And up until the past couple of days, the market's been really bullish about the the dollar and the recovery. But obviously we've had a few days, we had the turnaround in the euro combined with this today, and suddenly it seems like the sentiment towards the dollar isn't what it was, and we could be in for a turbulent few weeks of some down days, some up days. It's a lot of volatility, and I guess that's what comes with the Christmas period anyway. We are in December, so the markets aren't going to be as liquid as they are during the peak months. That's not an excuse not to make any great trading decisions, but it's just something we need to be aware of. So without further ado, let's jump onto the charts and see what opportunities have arisen, or what's coming up in the next couple of weeks. Okay, so let's start by taking a look at a euro-dollar chart. Now yesterday we highlighted the fact that we were getting a bounce around a significant area where previous resistance is now coming into active support. What I did was I drew in a Fibonacci retracement line as well, just to see if we get some kind of a confluence of levels, and sure enough, look at what we get here. We get this significant level of resistance that's now becoming support in conjunction with the key 78.6 Fibonacci retracement. Now, why do I say that this is a key level? Obviously we know that 61.8 is the golden mean, but the 78.6 for me is key because this is sort of like the last level before the market retraces this whole previous move, which would definitely indicate a trend reversal. Now yesterday I was saying that on the daily we are in a downtrend, but if you were to look at it from a longer term perspective, actually we're in an uptrend. So let me just take you to the weeklies for a second and show you exactly what I mean. Look at this. So on the weekly chart we're starting to make higher highs, as you can see. So we failed to make a lower low there, we're making higher highs. So on a longer term perspective, this could just be, a correction in the longer term weekly trend going upwards. Obviously, we've got to decide on what trends we're trading on what charts, but this just give you an example of the different perspectives. So going back to the daily, if we were to trade this level, we've got quite a good reason to get in long here. We've got the bullish engulfing bar here that we spoke about a few days ago, and we've got the confluence of different levels. And looking at it from a weekly perspective, this is actually really quite a good level to get in. Unfortunately, we didn't get in. We weren't by the charts yesterday, we weren't by our screen, so we missed all of the big moves yesterday. We actually missed them. But we're just going to show you guys some of the opportunities had we been sat in front of the screens we would have taken. So first of all, we've got the euro dollar one, and if we drill down into the 4 hour, just see, no, we don't really have a 1, 2, 3 reversal pattern here, but we could have got in on the candle reversal pattern, which is the bullish engulfing there. Taking a look at the dollar franc, what we missed here is there isn't a candle reversal pattern as such, but we're breaking this key level of support that we had down here. You know, we were initially looking to go long. We got taken out of our long at break even, and had we been sat in front of our charts, we would have taken the momentum in the market, and the fact that this level got blasted through is, you know, is quite a key indication that the market wants to go further down. Again, we missed this, unfortunately. It's frustrating sometimes, but you know, that's trading. But that's what we would have done with this, and that's pretty much what we would have done across the board. You know, there are significant levels being broken across the board. Again, here, the Aussie CAD breaks down. We were short. We came out with some profit. Breaks back above our level. We would have been looking to get in long over there. And pretty much the same with the euro pound here, and the Aussie dollar. Well, we can see here was playing around with this resistance level here. It was close to the 50% Fibonacci retracement. Again, we got sort of like a spinning top. You know, not really a doji, but some people look at it as that because it's a Forex market, different data feeds and everything. But in any case, we've got indecision in the market indicated by this candlestick here. We've got a very bullish reversal candle here. And if we jump into the 4 hour chart, we can also see that we actually do have some sort of a 1, 2, 3 reversal pattern going on here. You know, we've got the bottom, comes up, comes back down, retraces a little bit, fails to move significantly lower, and we would have been in for a break of this level here. Let me just show you what that level actually is. So we're bouncing on this previous level of this support here. We have this level which acted as support on several occasions on the way up and on the way back down again as well. And as you can see here, market breaks back through it. We would have wanted to get long had we been sat in front of our screens, and that would have been, you know, a cool 200 pip move that we could have got involved in there. Unfortunately, we didn't see it, but these are the types of setups we look for. As I said yesterday, we look to follow the trend. We look to enter in the direction of the major trend, and we either enter trend following type setups, or if they're not available, or if we miss them, then we'll look to enter back in on the correction on a swing trading type setup, which will be a retracement to an important level that's, you know, in conjunction with a Fibonacci retracement and some price action. But as we go through this, we'll start to look into our methods for getting into the markets more and more. At the moment, we're just trying to highlight the sort of opportunities that we're looking for, so that you can get a feel for our charts and the sorts of things that we have up on our charts. As you can see here, there really aren't any indicators. We don't have, you know, MACD, stochastics, things like that. We don't believe that you need them. We haven't needed them to be successful thus far, and hopefully we can teach you guys to trade the same way. If you have questions, please post comments or send us an email. Our email address is available on our website, and we're going to do everything that we can to make you guys successful. So thank you for listening, and we'll speak to you on Monday.